We have today our topic compounding for contraventions. Very clearly, आज we are going to be talking about कि FEMA तो पता है, but what happens if we do not comply any of those provisions? Then what are the repercussions? क्योंकि repercussions जान ले, तो we will be either more, more stringent or more careful in complying with the law, or if we realize यार इतनी ज्यादा पेनल्टी नहीं है तो बिंदास जितना लॉ को वांट टू टेक अराउंड वी कैन डू इट as we used to do it earlier. I very clearly remember earlier when the penalties for breaking the signals or for non parking were not so high. All of us used to be like कि चलेगा अभी signal break करा late हो रहा है. But the moment Modi ji increased the prices tremendously for signal breaking, for non-parking or wrong parkings and all. Now the scenario is that by better safe than sorry. Now the penalties are too high. Let's not break the rules. Let's be careful while parking. Let's be careful by watching the signals and going. The same is the provisions with FEMA. FEMA 99 is what we're going to be talking about. Why 99? Because any FEMA before 99 was considered to be draconian, considered to be having very high penalties. But post that, it has become more liberalized. And that's what we're going to be talking about, that in the liberalized FEMA provisions that are there today, what is the scenario if you make any kind of a contravention, if you're not abided by any of the provisions or laws or regulations, what is it that will happen? Now, before I go further, I would like to understand whom I'm going to be speaking to today. And that's why I will request if you can use the chat box and give me some understanding of you, which means that how many of you are aware of the FEMA laws. So if you guys are aware of the FEMA provisions, have known about it earlier, just put it in a chat box as yes. So I know, okay, a lot of people are aware about the FEMA. Then I'll go a little more into deeper and take it as an advanced thing. But if I understand that, yes, most of the audiences are being less familiar with FEMA, knowing about it for the first time, you can chat as no. Then what I will do is I'll make sure I'll go to the basics first, so that, we are adding value to this 1 hour that we're going to be listening and learning. So, okay, today, still now I've got a mixed 50-50. Difficult for me to decide what to do. Okay, so more majority what I'm seeing is a no, less aware of the FEMA provisions. I will make sure that I go to the basics, I cover on each aspect of it, so that you will have more familiarity, more acquaintance with it. So under any law as it goes, similarly, FEMA provisions also is governed by rules, regulations. So usually, maybe if you are all CAs and practitioners, you will have used to looking at act, income tax act or companies act, and used to looking at rules. But when it comes to FEMA is majorly governed by rules. Then you have regulation, you have notifications, orders, directions, circulars, lastly act. In fact, FEMA act must be the one of the maybe the smallest act. शायद 7 pages के अंदर तो खत्म हो जाता है. But the majority that it is governed and it is operationally known is by the rules and regulations that are governing the FEMA. And similarly, as we said, that any provision, any rules, regulation, notification, orders, anything that has been said to be done, and if you don't do that, then there is a violation. When there is a violation, that is where compounding comes into the picture. Very, very simple. Unless you have made any violation, contravention, anything that you were supposed to do, you have not done, or anything that you were not supposed to do, you have done. If in दोनों में से कुछ किया है, तो ही compounding question में आएगा. In fact, now तो there is beyond compounding, there is something more also which is called as LSF. पहले तो गलती करो तो एक ही सजा मिलती थी. Compounding करनी पड़ेगी. Compounding officers will tell you what is your penalty and stuff. There was only one route tha. But now there is 2 routes, depending on where your case is and depending on what is the mood of the RBI officer. LSF, chota version, that is also there, which is late submission fees, and there is something else as compounding. We will speak about it in deeper in the next slides, wherein we will also talk about what is the difference between the two, what happens in each of the two. We will look at it too. But for the time being, let's understand कि compounding अगर हम कर रहे हैं तो वो कितने time period में होता है. So once you have made a mistake or a violation, you have to get it compounded. But a primary condition is that no officer will say, okay, galti maaf. First of all, whatever mistake you have done, whatever contravention or violation you have done, पहले तो उसको rectify करो, regularize करो. उसके बाद ही हम आपको penalty दें. So it is not, please get this understanding very, very clear. Compounding is not you are living with the mistake. I will today continue with the example of the bike and the scooter racing that I was just giving. That wrong parking कर दिया तो कर दिया, अभी एक बार चालान पे कर दिया, then you can continue parking your at that place. Or you are moving without a PUC and एक बार चालान भर दिया तो अभी चलते जाओ जब तक destination तक पहुंचोगे, you don't need to do anything in between. यहाँ पे ऐसा नहीं है. यहाँ पे if you realize that you have made a contravention, पहले उसको regularize करो, PUC कार्ड निकालो immediately. उसके बाद ही हम आपको penalty भरेंगे. उसके बाद हम बोलेंगे okay, now we nullify that you had done some mistake. So that is the thing. Or how much time period within which अगर आपने application डाली compounding की तो RBI will come back, then the time period is 180 days. RBI says, I have a lot of such orders, give me time to review it and come back to you. And they usually take 3-4 months before they actually even come back to you with a query on your order. But the timeline that is prescribed is 118 days, within which either they will say, okay, accepted or rejected. Now, let us understand when should one apply for compounding. So, as I said, that when a person is aware, या तो आपको खुद से समझ में आया, या तो आपको RBI ने, या your AD banker, your any other statutory authorities, or even people like us, the statutory auditors, or any other consultant, because of any means you have realized that okay, we have made mistake. Then suo moto means on your own you can rectify that mistake and go to RBI and say, hey, I have realized that I have made this mistake. I am suo moto voluntarily. I'm making this application to you. Please take it into consideration. और जो भी penalty मुझे सजा देनी है दे दो, and please remove this black spot from my history that I have done this mistake. Now, what are compounding orders? So obviously, a lot of you would have heard that when you go for compounding, how the income tax officer gives you an order after you have, your appeal is done or your assessment is done, and जो भी finally order आता है from the officer. Similarly, compounding का भी order आता है from the RBI that this is your mistake, and after your mistake, this is what we have taken on account from you, and whatever mistakes you have done, we are going to be penalizing you with this, and whatever it is written in that order, in that book or in that paper, that is called as compounding order. And till now, if you will just go ahead on the RBI's website, you will see around 4,500 such orders already there present on the website. Till 2020, you will find it at one location and then maybe at other. But total 4,500 such orders are present on the website. Those orders that are present with details are very similar to our income tax, how we go for case studies. They're similar to that. But what thing very important to be realized is this orders does not hold any precedence value. How in income tax, you can say that in so-and-so case, this was the similarity of the case to ours, and this is the opinion which was taken by the IT officer. Please take a similar view and release our case or do accordingly. Similar thing, nothing of that sort you can preach to any RBI officer based on this compounding orders if you would have studied of the past, any of the orders that are present on the website. But only thing that helps you is to understand that what are the various kinds of common mistakes that people have been doing, what are the kind of view that RBI takes in such cases, what kind of interpretations of the principles they have taken. So it can help you as a guidance value, but you cannot use it as a precedent, how we do it in other cases or other laws. That is something unique to FEMA, which needs to be understood for people who are not practicing regularly FEMA. Um, since we are chartered accountants, we cannot live without numbers. कुछ तो statistics चाहिए to understand how it works, and hence this a brief statistics about total compounding orders that is passed by RBI. Now this is not about total, मतलब inception से अब तक. We have taken a case of 4,500 which are available. Just a gist of that, and it is only a statistical value to help us understand that what is the majority of the mistakes people have been doing. And what we realize is that people have been RBI has been imposing penalty to maximum, I mean 50% of the cases, which is lower than a lakh of rupees. There has been only a few cases wherein RBI has given penalty which is above a crore. Definitely there is a mechanism to identifying the amount of penalty that will be levied. RBI has given a mechanism, which is a mathematical formula which you need to follow to arrive at the value that will be your penalty that is levied upon you based on the contravention that we do. But what we realize is that majority of the cases, it is more of a procedural mistakes, and which is where the penalty impositions are also lower. And hence, as we see here on screen, more than 50% of the cases, it is less than a lakh of rupee. One more such similar statistics to understand is when we are guiding our clients, which are the common areas where people have been making mistakes. And the highest, as we see here, is in 77% of the cases, which is FDI. पैसा लाने की इतनी घाई होती है कि सारे बाकी compliances हम भूल जाते हैं. FDI is when you bring in money into the company, and whenever that foreign direct investment comes in, there is a couple of compliances that needs to be done in terms of pricing guidelines needs to be followed, in terms of reporting needs to be done for the money that has been come in from FCGPR. A couple of more to be in place, KYC should be in place. If any of these guidelines are not followed or any of these filings are not done within a time period, then it will be a case of violation. And as you can see here, almost 77% of the time the contraventions are relating to FDI, as the cases are talking about it. Now, once we are talking about that, we also need to know which are the provisions which govern the compounding guidelines. So it is section 15 of the FEMA Act, which is talking about it. And the governing guidelines are, one, you need to look at the rules, the foreign exchange management compounding rules, and you need to look at the master directions on compounding. Once you have these two provisions or guidelines that you look into, you will be able to understand what is the procedure, what is the methodology of going ahead with the compounding. Now, who has the power to compound? So the power to compound depends upon, one, also the kind of contravention that you have done, and also depends upon the quantum of contravention that has been done. Like, for example, if there is a contravention of 3A, then in that case, these are the additional director or the deputy director of enforcement are the ones who will take care. And in any other contravention, it can be an assistant general manager of RBI or the deputy general manager of RBI who will be able to take up the cases. Also, it depends upon the value of contravention. If it is something which is of a higher value, you will see the chief general manager of RBI also taking our case. We have come across a case in our scenario wherein actually the general manager of RBI of one of the regional offices is personally looking into the contravention, is personally looking into the compounding, and they go so deep. If you would have submitted, or say in our case, the submission was not less than 150 pages document. And when we got a reply from the RBI, which was after 4 months, and we got a comment on each and every page is what RBI officers had reviewed. They commented on most of the lines wherein each we could realize that RBI had studied each of the pages. So if they find that yes, the what I wanted to convey was that RBI is very meticulous when it comes to cases, and they are studying the applications thoroughly. And at times, a few of the regional offices are very cooperative. They come back with their queries and they come back with their comments for each line item that they want you to revert and come back to. So as I said, depending on the quantum, the cases and the kind of contravention, it depends upon whether your case will be going to RBI or the DOE, and also depends on the volume. Now, here we are talking about what are kind of contraventions that needs to be looked into. I know for the people who are new to this provisions, this slide may seem to be like in French, KR, what is all this para 9(1)(a) of Schedule 1? So let's make it more simpler. If you are, this is a contravention which is relating to FEMA 20. So the earlier, now there are three provisions. One is if you're talking about FDI, that is foreign direct investment. There was earlier FEMA 20, which looked into the provisions relating to FDI coming into picture. Then it was replaced with FEMA 20R, and now the non-debt rules. So all three of them, basically in all of this that has been present, there are different guidelines that needs to be followed. Like as I mentioned about the pricing guidelines needs to be followed, the KYC needs to be followed, valuation should be in place, allotment should happen within the stipulated time period, reporting of that allotment needs to happen within a stipulated time period. A lot of cases, there are approvals if sector guidelines needs to be followed. If there is a transfer that is happening, then transfer should happen within the timeline. What if it is happening on deferred basis? How much is allowed? All of that is mentioned into this paragraphs and schedules. Life has been made easier by mentioning this, is that RBI says if you are making any contravention of any of these provisions, be it of FEMA 20 or FEMA 20R, which is also replaced, which was replaced by FEMA 20, or the FEMA non-debt rules, any of this, all you need to do is come back, comply of the non-compliances that has been done, and then come to us for the application. Now, like if let me take an example of the FEMA non-debt rules, because those are the latest ones. Like for example, the first rule 2K says about the definition of the equity instruments. Now, if you have issued anything which is a convertible nature of instrument, let's say I have issued a optionally convertible preference shares. Now, will this be called as an equity instrument or will it be called as a debt instrument? Let's see what the audience has to say. Let's take this as an example so that we can go deeper into the compounding part. Optionally convertible preference shares. Please type equity if you think that yes, it is an equity instrument, or type debt if you think it's a debt instrument. Oh, yes, Sharon, it's an hybrid instrument. I absolutely agree to it. But till now, FEMA does not define a hybrid instrument in terms of usage. The law, FEMA law is divided into equity instrument and a debt instrument for the time being, for our understanding. So Arjun says it's a debt. DP says it's a debt. Yes, Rajendran also says it's a debt. So yes, if it's an optionally convertible instrument, it's a debt instrument. But if it's a compulsory convertible instrument, that moment it becomes an equity instrument, and we need to follow all the guidelines which are relevant to an equity instrument. Now, if you have done a mistake here, then this is the rule which you have not followed, and accordingly, we'll have to go in for compounding. Pricing guidelines, sectoral caps, restrictions on receiving investment. Now, there are a couple of restrictions in terms of sectors which cannot receive in FDI. If you have received the investment under any of those sectors, then also there is a trouble. If transfer of equity instruments by NRIs or OCIs, again, the guidelines and all that needs to be followed. Regulation 4 talking about filing of FCGPR, or if you have done any delay or non-compliance by not filing any of the FLAs, FCTRS, LLP1 form. These are all the regulations for which you may be asked to go to compounding. Now, this was the compounding application which you can put it up to your regional office. But there are a couple of compounding applications which needs to go to the FED CO cell New Delhi, and they are only authorized to compound this mistakes or this contraventions, of which one of it is acquisition and transfer of immovable property outside India, or if there is an acquisition and transfer of immovable property in India, or establishment in India, or a deposit regulation. If any of this is what is going to be your contravention, then you did not have to go to your regional office, but we need to go to the New Delhi. So what I would suggest is, if any of you are advising your clients or are going to be dealing with a scenario wherein we are looking at making a compounding application, the first step we need to do is understand what is the nature of contravention that we have done or that the company has undertaken. Secondly, I quantify the quantum of the contravention. Based on that, you will know where you have to file your compounding application. Now, usually I find this query, and I like to address this here at this point in time, is that usually if you guys are practicing FEMA, you are aware that we generally have to either make applications through our AD bankers, or we have to do our online filings. Like you are aware that FCGPR form, this has all become online via the firm's portal that we do it now. And whenever we need to do our ODI filings, we do it via our AD banker. At times, even when we have to do our compliances or we want to ask some clarifications or approval, we have to route our applications through the AD banker to the RBI, because we are directly not allowed to go to RBI. What is your view in terms of the compounding application? Do you also file the compounding application via the AD route? You will submit it same way you will submit it to the AD, and then AD will be submitting to the RBI, or you will directly go to RBI? What is it that you think we will have to do? AD route? Yes, Sagar, Taxmann people will be sharing this presentation with you. Okay, forum says yes through the AD route, and Binal says directly. Babu also says directly. Yes, guys, this is something which is very important to know. Arjun says via the AD bank. That compounding application is something which the client has to file directly to the RBI office, which does not go through the AD banker. This is one scenario, or this is one compounding, or this is one area under FEMA wherein still आरबीआई ने खुद के हाथ में रखा है, एडी बैंकर को बीच में इंट्रोड्यूस नहीं किया है. So that is why this I have spent 3 to 4 slides in talking about that where do we file the application. So if you are filing the application, you need to know where you need to file the application. That's why I mentioned that please identify your nature of contravention, so that you know whether you have to file to RBI Mumbai, you have to file to a regional RBI office or a Delhi RBI FED office, because that will all depend upon the nature of the contravention and the quantum of the contravention as to who is going to be the officer who will be undertaking your case. Now, contravention of provisions under FEMA, are a couple of few contraventions which are a general contravention, is what we have seen based on our experiences and also based on the couple of contravention orders that compounding orders that we have studied. One, in case of ODI, we see it is, the most common contravention is non-submission of form ODI. You do not have the UIN allotted and you have made the investment. Secondly, again, a very, very common contravention is person would have opened the company outside India without intimating to RBI, without even remitting the funds. The most common here we see is Hong Kong. We had gone to Hong Kong. The client would come back to you and say, we had gone to Hong Kong, and to open up a company there, you only required $1 Hong Kong, which we were carrying in our pocket. We gave it to the authorities there, and our company was incorporated, and we are doing business since a year now. Very, very commonly heard. So that is not permitted, because under ODI rules, it is very, very clearly mentioned that any kind of an obligation, if you are opening up a company outside India, irrespective of the amount you have sent or not, once you have committed for it, you need to route it through RBI and you need to file Form ODI. The third one is you are not obtained the share certificate within the stipulated time period, because what happens is most of the times we see that once the remittance is done, once the ODI form is filed, client bindas ho gaya, abhi mere ko kya, mera to kaam ho gaya, and they will start in their business and they get so involved in it that they will forget that they still have to get the share certificate within 6 months, and not only get but submit it with the AD banker, and make sure that the AD banker puts two stamps on it, because 80% of the times we will see that we have submitted, but the AD banker is not able to locate that document of share certificate that we have submitted, because for them also that becomes a time lag, and they have to make sure that that one file again goes into the client's particular UIN and ensure that okay, it is there. In fact, now we've become smarter. What we also do is we make digital use of the technology, and we also share the soft copy of the share certificate over email with the banker, so that we have a record that we have not only submitted hard copy but also the soft copy, because this is also a very very common area where non-compliances happen, because it is with a time lag that this compliance needs to be made. And again is filing of APR. Usually you will see that people file APR for the initial period and then they miss upon it. So that is also a contravention that takes place in a lot of cases. Secondly, when it comes to ECB, as you are aware, you need to be an eligible buyer and a recognized lender to make sure that your company receives ECB. So you need to be an eligible borrower, and from whom you are receiving, he needs to be a recognized lender. You need to adhere to the minimum average maturity period, all-in cost ceiling in terms of the interest and other costs that you're going to be paying. End use should be one of that is permitted, but the most common here, which we have seen, is people receive the funds, it's lying in the books, and LRN is not obtained. LRN is a specific number, how it's a unique identification number in terms of ODI. Similarly, LRN is a number which is specifically allotted to each ECB which is taken, and that needs to be on record whenever you take the ECB. Now it comes to FDI. As you all had seen in the previous statistical slide, that 70% of the times it is FDI errors that has been made. So one, it is non-reporting of the inward remittance within 30 days. This is about the older provision. Earlier, when it is to be FEMA 20, in that there used to be a form annex which we need to file. The moment the FIRC was received, within 30 days, it was required to be filed. A lot of non-compliances used to happen at that time, because at times FIRC was received late, at times people did not follow it. So that used to be one of the major contraventions, which is not there currently. Second is equity is not allotted within the stipulated. It is not being done within the stipulated time period of 180 days. FCGPR is not submitted. Transfer of shares are not, transfer has taken place, but FCTRS is not submitted. Or wherein you have done, as I said, that equity instrument is different than what is permitted. Now, these are a couple of contraventions which our RBI says, okay, we understand you're a businessman, we understand you take help of consultant, but they are also busy. So you may miss upon those compliances. They do not take a serious view against this compliances. They call it as a regulatory or in terms of a reporting non-compliances, and in which RBI usually levies a penalty based on a calculation, and you are given a clean check. But there are a couple of contraventions which are serious in nature, जहाँ पे RBI भी serious view ले लेती, which is like, they are suspecting of money laundering or any kind of a terror financing, or they are, you are, some kind of an integrity of the nation is being affected. अगर ऐसा कुछ सिनेरियो में अगर आप दिखे, then RBI takes a very very serious view. Matter goes up to as high, goes even to the ED, Director of Enforcement. But these are all serious crimes, and at times not compoundable. Now, that's all about the compounding, but now we need to understand what is the benefit of compounding. As I said, it's a voluntary process. It allows you to get a clean sheet. There is no need of a personal hearing also. You are also given, absolute transparency, saves time in one application. You can make as many contraventions you have done. You can put all of it under one compounding application and submit it to. But at the same time, RBI is also very particular that बस आप गलती करो, जितनी करनी है करो, सारी डाल के लेके आ जाओ. But I will not allow you to make, I will not allow if you make same mistake again and again. Which means that if you have made a mistake, then at least RBI expect करता है कि आपकी memory at least 3 साल तक तो सही रहेगी. Which means that you have made one contravention for which you have come to us, took the pain and the hassle of getting it compounded, then at least you will remember it for 3 more years and you will not make the same mistake again for 3 years. आरबीआई इतना तो लीनियंट है, बोलता है अगर 3 साल के बाद आप भूल कर गए और वापस वही मिस्टेक कर दी तो मैं आपको चला लूंगा. But at least I expect that you remember your mistake for 3 years, which means that if within 3 years you are not allowed to compound for the same mistake. New mistake, RBI says, okay, I will allow you to do the compounding. But if during compounding, first of all, you have to get the necessary approvals that you had not taken earlier. Compounding is not a process wherein you go to compounding and your non-compliance or something which, मतलब ऐसा नहीं है कि approval की बदले आप compounding के process से approval ले लो. No, you cannot shy away with the process of approval if your transaction requires you to take any approval from any of the authorities. Then before putting in an application for compounding, you have to go ahead and make sure that you have that application in place, you have that approval in place, and then only you can go in for compounding. And further, this is also very, very clear now that if during the compounding process, RBI feels that you have not, you're not cooperative, not providing enough documentation and data that they need, then in that scenario, they refer the matter to ED. So that is now, a lot of regional offices have started doing this, that they ask you the data for last, since the company was incorporated. And a couple of cases we have seen that the company is not able to provide such data because a couple of companies were as old as 40, 50 years. And they are not able to have the data as old as 40 years with respect to even the company is required to even maintain the FIRC copies for 40 years old. So if you do not have that, when RBI is asking, then RBI is not ready to accept that, okay, you have not maintained. Because under RBI, under FEMA provisions, there is no timeline which has been mentioned for you to maintain the books of accounts. So even RBI can ask you the data for as old as from the year of incorporation, which can be 40 years from now or which can be even 50 years from now. And they can ask you any document. It can ask you, send me the acknowledgement, send me the entire form, send me the FIRC or any relevant document, and you need to submit. If you do not submit such documents and RBI has a doubt, then they may refer your case to ED after giving you usually sufficient time of hearing and sufficient time to submit the data. But yes, we are seeing these things happening of late. Now let's understand what is the compounding process. Now submission of application to RBI and not to the AD banker, as I mentioned. The fee for the application is only 5,000. That too RBI will accept in favor of DD. Only the DD gets done when they accept your compounding application. If for any reason they feel the documentation are incomplete or they need anything additional, they may either reject it completely after examination. As I said, in our case, it happened after 4 months, or they may accept it and call for additional documents. It depends upon how they feel about the sanctity of the documents, about the completeness of the application. Based on that, they may choose to either completely reject and ask for additional documentation also. Now, I have just tried to go deeper into cannot go into each cases, what is the process and what are the documentation. But since FDI was the most highest in cases, we have chosen FDI to be the area wherein we go dive deeper into understanding what kind of documentation RBI usually demands when it comes to compounding application for the FDI purposes. So usually, as I said, FDI, ECB, ODI for each of the cases there are different annexures, different documentation that needs to be submitted. But now we speak of the FDI format. One is they need every detail about the company, their incorporation, their PAN number, their GST numbers, their locations, if they have any foreign investor, all the details about the same. They will also require you to fill up the FIRC copies in a particular format. The people who would have ever tried filing up any of the compounding for FDI would be knowing a very common terminology, table ABC. Table ABC is basically a table which gives a reconciliation to the RBI officers for their understanding on what has happened on the cap table of the company. So basically, table A talks about every money that has come into the company in terms of FDI in whatever form there could be. So here, table A talks about those remittance received details. Then we move to table B, wherein once you have received the funds, table B talks about whatever allotments are made. So table B talks about all those allotments, and C talks about okay, A में पैसा आया, B में allotment हो गया, C में अगर कुछ additional और shortage है, so if there is any excess, refund कर दो, shortage है, call कर लो, and you close. So basically there needs to be a reconciliation between table A, B, and C. All three needs to be in sync. So he RBI will accept, otherwise they'll reject if your table ABC are not matching. And D obviously talks about the authorized capital, authorized share capital effects. Now we go to understanding on the computation of the penalties. So as I said, this is purely from the law. If you open up the master directions, you will be able to see that RBI has very clearly mentioned here that what is the nature of penalty, what is the nature of contravention that you have done. Based on the nature of the contravention, the formula is mentioned about the penalty that RBI may levy once you have gone in for the compounding application. The various types are covered under, reporting contravention by LOBO, or you have not received the share certificate, or allotment delays. Most of the cases, it's a fixed fee plus a percentage, depending on what's the nature of the contravention. So all relating to the same. Now, a very big understanding which is required here to be understood over here is that most of the cases, FEMA 20, this compounding provisions had a very big change, was since November 7, 2017. Anything, any kind of contraventions which were prior to November 2017, those were required to be gone under compounding. But post November 2017, a new concept RBI introduced, which is LSF, late submission fee. And out of most of the regulatory reporting non-compliances, which we just saw above, FCGP are not filed or FLA not filed, all such reporting non-compliances, RBI has done life easier, saying don't come to me. The moment you do your filing with the AD banker, RBI calculates the late submission fee for each of such non-compliances or delays. And once you have done that compliance, matlab FCGPR एक महीना late भरा, but now you have filed. The moment you filed at FCGPR, you will receive, along with the acceptance of the form, you will also receive an LSF amount calculated, saying that since your period of delay till your form is accepted, this is the LSF amount, which is what you need to pay within a stipulated time period. You don't need to do compounding. You don't need to file everything to RBI and send it. Just pay the LSF fees and your matter is sorted. But that is for all the non-compliances post November 2017. Now, again, if I go to the era before 2017 and we say that, okay, your matter is still under compounding, then the maximum compounding penalty that can be levied is 300% of the amount of contravention. But at the same time, if there is repetition in, in the mistakes or contraventions that you have been doing, then obviously RBI says that we'll also get stricter and the amount of penalty can also increase to 1.25 times or 1.5 times, depending on the nature. RBI further in this, all this compounding applications, what we do, and once we receive the compounding order, we need to do the payment of that compounding penalty within 15 days. If that is not done, now this is very simple. RBI says आप आए सुओ मोटो मेरे पास, मैंने आपकी पेनल्टी को कंपाउंड भी करके दिया, बट once it is compounded, whatever penalty I will say, that penalty you have to pay within 15 days. If the penalty is not paid within 15 days, there is a potential that RBI will then push up your matter to ED. And at the same time, you do not have, there is no provision under the compounding rules as of now, which allows you to put an appeal to RBI, bhai, bahut penalty zyada hai, kuch karo. Nothing. RBI says once whatever compounding penalty we have put up, that is what you need to pay. There is no provision for asking for an extension or asking for a reduction or an appeal or anything. This is what you need to follow. इसको याद करते तो अनाड़ी कोटे आ जाता है, राइट गाइस? वंस यू एंटर इट, चुपचाप व्हाटएवर पेनल्टी यू आर गेटिंग, चुपचाप ले लो, पे कर दो, डोंट अटर अ वर्ड. दैट्स व्हाट आई कैन से हैपेंस हियर आल्सो. But now let's move to LSF. Since, as I said, that post November 2017, LSF is applicable, so it's very important for us that we not only understand compounding, but we also need to understand LSF. So LSF is being introduced because LSF is introduced not for all provisions, but especially in case of a couple of provisions, which are, as I said, FI, foreign investments, external commercial borrowings, and overseas investments related, whatever non-compliances are there post 2017. In that case, to bring out the uniformity, LSF came into the picture. Yet, those provisions, beyond this, if there is any contravention, you still have to go to RBI. You still have to do compounding because still LSF is not brought across all the contraventions that are happening. Only these three provisions are covered for the time being. And again, as the matrix was given for compounding, similar matrix is also given for the LSF calculation. The basic fee is 7,500 rupees. Post that, there is plus a percentage of the amount and the time of delay and all gets covered. That's the mechanism matrix that has been mentioned. Again, LSF option can be availed till a period of 3 years from the due date of reporting or submission. Post expiry of 3 years, the contravenor will continue to have the liability to apply for compounding. Now, we need to understand the difference between compounding and LSF. Earlier, compounding used to be, though it used to be hassle-some that you had to, file the application with the RBI, wait for them to come back to you, check, maybe, 1 or 2 iterations were required. And at the same time, they would also come back to you after maybe, over a period of 180 days. That was there. But RBI used to have a very small amount of compounding. That's what we have seen, Generally, 100 rupees was the minimum that used to charge, which has now gone to 7,500 as minimum for any one of the non-compliances also. But at the same time, maximum, which was earlier 300, LSF में generally 100% में रुक जाते हैं. So that's the difference, is what we have seen here. And also we need to look into it that at least you are getting faster closure. But of the record, we can also say because of LSF, there has been a lot of money that has been going to RBI because there is a lot of non-compliances which were getting delayed because of compounding to be completed. Vis-a-vis LSF is much quicker and a faster process. So compounding, as I said, late submissions are imposed for delay in submitting required document or information under RBI. Whereas in compounding, it is a process by which contravention of FEMA provision can be regularized or condoned by the RBI. As I said, this is 180 days, this is immediate. One major difference is also within the time frame within which LSF and the compounding penalty is paid. For LSF, RBI gives you 30 days time that to pay the LSF. And for any reason, because LSF is also received via email. I mean, the information to pay LSF is received via email. So for any reason, you have missed paying your LSF within a 30-day horizon. Like it happened with one of our clients that they had received email from RBI, but amongst a lot of emails, the company missed looking at it and they realized it only after a period of 60 days. And by the time the time period had lapsed. In such scenario, what we had to do is we had to go back to RBI, tell them to recalculate the LSF, and then we were asked to make the revised payment with the higher amount. So that is possible. It is not like, you are sent to DE, ED for the not making the payment. Now, let us take example of one or two, case specific compounding applications, and then I will open up the floor for any of the questions if you have for me. So in case of compounding orders, we just, try to understand what are the kind of errors and what are the kind of uh, 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 contraventions people have been doing in each cases. Like this was a digital engineering and cloud transformation company. The Indian company had issued ESOP to a person resident and person resident outside India, and subsequently bonus shares were also issued to them, for which no compliance was made by the company. Now, also company had made delay in repayment of excess money. Subsequently, RBI raised queries for submission of relevant documents which are not available with the company. Now, as I said, first of all, you need to understand what are the relevant provisions under which the non-compliance has been met. So here they have non-complied to FEMA 395, also FEMA 20 or 20R, depending on the period at which depending on the period in which this non-compliances was taken into account. Now, the second case is wherein, say, it's a Rajasthan-based resort company. When the shares of an Indian company were purchased by the person resident outside India, and they were subsequently transferred those shares to multiple person resident outside India, and then those shares were purchased by Indian residents. So basically, NR to NR, there was a transfer, and then there was a transfer in the Indian to a resident. Now, subsequently, RBI asked that, okay, show us the filings. Now, here there is multiple non-compliances in terms of one, your sale of the capital instrument from one person to another is not recorded. If any of such is not recorded, you cannot go for compounding. First, whenever you receive such notices, what you will have to first do is go ahead and do the compliance, file from FCGPR or FCTRS, whichever is relevant, and then post that you go to RBI, say that this is all what we had not complied. Please specify the regulation. RBI wants us to specify the regulation, how we have mentioned here, regulation 10.3 of FEMA 20R. RBI wants us to specifically mention each of such non-compliance or contravention provisions into your application whenever we put it forward to RBI. In terms of documentation, compounding application, as I said, in a format with 5,000 rupees is what needs to be sent. Along with that, you need to send all the annexures and documentation. You need to also send an undertaking that you are not under an investigation. Be very, very clear about the undertaking because there is no format specified. Kuch bhi miss ho gaya in the statement, then RBI will reject your application saying it, the undertaking not as per format. But there is no specific format given, but wording needs to be very clear. You need to fill in a duly filled ECS mandate form, give your MOA, give your latest audited balance sheet while you are applying, and application has to contain the contact details about the applicant and maybe even your directors. RBI specifically asks at times that send us the email ID and mobile number of all your directors, because if the moment they find that the company is not responsive enough, they will start shooting mails to the directors also that this is pending, you need to come up with this and stuff. So make sure whose email ID and stuff you are providing. What are the other factors that you need to take into account while passing, whether the other factors that RBI takes into account while filing the compounding orders or while passing the compounding orders is that there is no unfair advantage that you have received. Because the moment earlier used to be, I remember the case of Goa, wherein a person resident outside India had invested in a Goa property which he was not allowed to. And at the time of sale, he had made more than 3 times is what he had made on sale of that property. Then RBI under penalty took away the entire gain that that person had made, because that was something which was unfair to him, which was not allowed under law. So ऐसा नहीं है कि आपको law में allowed नहीं था तो आपने बड़ा सा gain कर लिया and then you felt कि चलो छोटी सी penalty भर के निकल जाएंगे. RBI has the powers to take away the entire gain that you have made because of the contravention also, wherever obviously quantifiable. amount of loss caused to the authority, I mean to them, to the agency due to the contravention, any economic benefit to the contraventor due to the delayed nature of compliances. If they see that, it is a repetitive nature of contravention, you have a track history of it, then they can get more serious over you. What is the contravenor's conduct? Be very cooperative is what I would say with the authorities. Give more disclosures. Don't try to hide things. We have had one case wherein, earlier, before we came into the picture, company had filed 2 times compounding applications with the RBI stating that we do not have any further information. And RBI said we want more information. Then we were hired and we said, okay, if we dig deeper, there is a lot more that can be found. And 30% of more information was found and we submitted to RBI. Now, because of that, RBI is now the company does not have any more information. We also tried digging, nothing more could be found. But now RBI is not accepting the application, saying that earlier also the company had said that they don't have any information. And then on push, on perusal, they submitted more. So now we do not believe to your statement that you do not have more information. So make sure that your first application is wholesome and you are providing maximum data and content that RBI wants, and be truthful about the documentation that you are submitting or the story that you are submitting to RBI. That's all from my side for now. We will take up the Q&A. We are together a part of a Tax and FEMA WhatsApp group wherein professionals like us help exchange each other. If you wish to be a part of that group, you can scan the QR code and join. And I've also shared my details if required. I would now like to take up a few of the questions that are there in the chat box and the Q&A. If there is anything more that I can help, please post across. Can there be a compounding for more offenses under different sections under FEMA? Yes, as I mentioned, there can be multiple, if you do not follow any of the regulations or provisions, there is a contravention that is there. And those offenses, if compoundable, as I said, majorly 3 areas are non-compoundable offenses. Beyond that, those are compoundable. You can go ahead and do it. In case, Sakshi has a question, in case of a subsequent disinvestment after ODI, money has not been received within 90 days. Request you to guide us on whether LSF is viable option to regularize or do we have to opt for compounding. Sakshi, here what happens is ODI, in case of ODI, any non-compliances, as you heard, after 2017 November, you have to go for LSF. But right now, the scenario is such that LSF calculations in case of ODIs are taking time. But LSF is always a better option to do, according to me, vis-a-vis compounding. Unless RBI, in our case, we had seen in one of the cases, RBI had levied both. RBI levied LSF also, and for a couple of contraventions amongst the whole bunch, RBI had asked to do compounding also. So if compounding is required, RBI will come back to you, but otherwise I believe LSF should be a good option. Though for ODI purposes, it is taking time right now. For FDI, it is quite fast, rather immediate. Company has not filed its FLA since 7 as per new LSF guidelines. Can it offer LSF for all years of non-compliant where to compounding partly and partly LSF? Both will be there. You will have to do compounding for the previous ones. No choice for it. LSF, you can go in for the latest one. My friend, an Indian resident and citizen, traveled to US and subscribed shares of a US company by paying 100 million in cash from his pocket. Wow. Rajat Agarwal, our case, the client had visited Hong Kong. Your case, the client has visited US. Yes, this happens a lot of time. The same was not recorded in his ITR or any other source. Does this need to be compounded? Yes, it needs to be compounded. But before compounding, Rajat, you will have to do regularization. You will have to do the filings here. Since it is an ODI transaction, you will have to do ODI filing, do the complete compliance in place, and then only you will be allowed to go for compounding. Otherwise, your compounding application will not even be accepted unless you have regularized the transaction. It doesn't matter whether you have shown into IT or not, but the company remains. And if he ever wants to sell it company or get some money from that company, he's going to have trouble. So it is better to get it regularized as soon as possible rather than for delaying. What is the approx compounding for FCGPR submission after 5 years? So the matrix is being provided. based on the matrix, the calculation needs to be done. Shireen is asking, in addition to LSF compounding required, Shireen, usually we see that LSF is enough, but as I mentioned to you, in one of our clients' cases, LSF was levied, and yet RBI asked the client to do compounding specifically. It was for two cases that RBI asked to do compounding, but once it is with RBI, वो पिटारा पूरा खुल ही जाता है, and then RBI started digging into last 40 years companies' data. So yes, there can be scenarios wherein RBI may ask you to do LSF plus compounding, but in most of the cases, what we understand is usually LSF and it's enough. Where can one find compounding orders on the RBI website? You will be able to see it. Just try and find on the compounding orders section. If export receivable is not received for 5 years, can I convert that to equity as an ODI? सर एक्सपोर्ट रिसीवेबल को ओडीआई में कन्वर्ट करने का डायरेक्ट ऑटोमेटिक रूट में प्रोविजंस नहीं है. My 100% subsidiary private limited, but I think you will be able to do it if you go deeper. My 100% subsidiary private limited missed filing FCGPR form before 5 years. Amount involved is what could be the penalty? Bhargav, I think you should not worry about the penalty, because whatever it may be, filing is something which you need to do. Compounding penalty amount will depend upon, as I said, go through the matrix and you will know the compounding penalty amount. But any which ways, you will have to go ahead and do the filing. Since it is FCGPR reporting requirement, you will have to do this also, and you will also have to do FLA, because अगर आपने FCGPR ही फाइल नहीं किया, आपने FLA भी नहीं किया होगा, तो दोनों करो, उसके बाद ही आप कंपाउंडिंग के लिए या LSF के लिए जा सकते हैं. I am a resident Indian. I'll take this as the last question because we are already hit our timeline. I am a resident Indian living in India. I want to invest share of US share market. What limit for investment in shares and property? So Praveen, if you will search on YouTube, we had taken a separate session wherein an Indian can invest outside India into US market shares. That will give you much more detail into it. But to give you a brief answer, there is an LRS limit which is allowed to an Indian resident, within which he can make investment, subject to other conditions for which you need to go through that YouTube video that will be helping you. Taxmann team, we have 3 more questions. Would you like me to do? Take it up, or since we have hit the time?
If you would like to take them up, ma'am, please go ahead.
Okay. So we have one question. In case of our contravention, capital investment has been adjusted against revenue transaction. In case of ODI investment, individual residents have been shares, individual residents has been issued shares of ODI without approval. Company profile with RBI is mismatch. Lodha ji, there are a couple of non-compliances in place. We'll have to pick up each non-compliance, do the compliance for each. It is possible to do the compliance for all of it. We need to do that, and then only you can go in for compounding. Transfer of shares by and NRI in unlisted company by mother-in-law to daughter-in-law of a private limited gift, and shares are held in demat form and transfer. What is the compliance? Sir, whenever there is a transfer from a non-resident to a resident or a resident to non-resident, form FCTRS needs to be filed, even if it is a gift or it is a sale by consideration, whatever mode it can be, but form FCTRS needs to be filed along with all supporting documentations. So that is what you will have to do. And if you have not done it till now and the transaction has already completed, first make it regularize the transaction, and post that you can do the compounding application or LSF as it may come. What will be the requirement in case export receivables is not receivables due to foreign company going under liquidation? There is a procedure for write-off within RBI has given a few limit to permissible write-offs. If you are falling within that, your amount is falling within that, go ahead and do the write-off. If not, you will have to take specific RBI permission if your amount is higher than that. If a resident individual has subscribed to share of a foreign entity and no consideration is paid for a year, is LSF applicable or compounding? Yes, Sakshi. Recently, just before this call, I spoke to one of my clients who has opened up a company in UK, and he has opened up the company, but he has not paid any money from here. But if you have opened up a company and you have received the share certificate, you are already under non-compliance, and hence you will have to now remit. Once you're remitting, that is the time when you will be doing your ODI compliance, you will be doing your filing, you will receive your UN, and along with that, either it will be LSF or compounding, depending on the case. But yes, it is a non-compliance. Private company with a UIN allotted shares to private company with UIN allotted shares to non-resident, and the same company merged with another newly formed company, and the NRI shareholder new company. In such old case, intimate RBI. Yes, we recently did one wherein both in fact had happened. There was a merger at the HO level outside India, and also a portion was demerged. So in that case, there is a filing that needs to be done with RBI. I mean, via the AD banker, you need to do a investment and disinvestment, both needs to be filed, and there's a process that needs to be followed, and you will have to get your project profile updated in that scenario. If you have not done that, need to do that first, and then you will have to go in for compounding or LSF.
All
I
right.
think just last, I'll take it up.
Sure,
I
please
think
go
this is the
ahead.
last one. We would not want Sashidhar to be left. And for purchase of agricultural land by NRing, what things to regularize to do before going for compounding? Okay, Sashidhar, first of all, an NRI is not allowed to buy an agricultural land. So the first thing you'll have to do is give it away. There are provisions under FEMA. You'll have to first say how he has got it, whether he has acquired it via, some heredity or succession, not heredity, but under succession or something. Then in that case, there are provision which says that either you can gift or you can sell, or what are the provisions that is permitted, that has been mentioned under the provisions, do that. But first of all, get rid of that agricultural land, then only you can go in for compounding. Do not continue holding the agricultural land under an NRI. I think we've tried to answer everybody's question and hope it was helpful. Thank you so much.